Hello guys, I'm ATP, and in today's video I'm going to reveal my number one stock pick for May 2025, an amazing opportunity with a rare potential upside. I will also walk you through my current stock portfolio, show you how I calculated the fair value of this month's stock pick, and if you stay until the end, I will reveal 3 more undervalued stocks that could also deliver above average returns. Let's dive in. Firstly, I want to thank XTB for supporting this video. XTB offers 0% commission on both real stocks and ETFs, with a minimum transaction value of just €10. These conditions apply to monthly volumes up to €100,000, and above that, there is just a 0.2% commission with a minimum of €10. If you want a step-by-step guide on how to use XTB for commission-free investing, check the link in the description for my full tutorial. And for those who open an account using the link in the description and use the code ATP, I am offering 1 month of completely free access to our premium investing group. You will get all my real-time portfolio updates, ETF strategies, stock alerts, and much more. You don't even need to deposit funds. Simply create your account, send us a screenshot, and we will give you the free access. Now let's have a quick look at how our portfolio is doing. As you know, the stock market recently faced a strong correction caused by the new tariffs announced by US President Trump, which triggered a sharp pullback across global markets. Our portfolio was, of course, affected and experienced a temporary decline during this correction. However, despite the volatility, we still remained profitable overall, a clear sign of the strength and resilience of our portfolio. And for us, this correction was actually a great opportunity. And why? Because we boosted our portfolio by investing an additional $1,000 in high-quality stocks, acquiring 1 Salesforce stock, 1 Adapt Systems, 4 Novo Nordisk stocks, and 3 Nike ones. And guess what? These new positions are already showing an average profit close to 12%. All these acquisitions were shared immediately and exclusively with our premium investing members, who also took advantage of this market correction. Currently, in our portfolio, our strongest position is Meta with a 320% net profit, followed by Fortinet with a 75% profit, and our weakest position is Intel with a 45% loss, which we are holding patiently for the long-term recovery. Now, regarding the broader market, as you can see on this chart, the S&P 500 index suffered a sharp correction, falling more than 21% from its all-time highs due to the tariff fears and global economic uncertainties. However, over the past 2 weeks, it has rebounded strongly, recovering about 15%, and looks ready to continue this recovery. The key support zone sits around the $4,900 area, which corresponds to the previous all-time high, and it has been perfectly respected, and the index is currently trading above it. In short, this pullback gave incredible buying opportunities on top-tier companies like Apple, Google, and Amazon, and there is still time to catch up. By the way, if you have advices for stocks you would like me to analyze in future videos, feel free to leave them in the comments. Now let's get to this month's top pick, Pepsi with the ticker PEP. Pepsi is one of the largest global food and beverage companies, founded in 1898. It owns the iconic brand Pepsi and others like Lipton, Lay's, and other common brands, and is currently ranked as the 73rd biggest company in the world by market cap. It's a stable and diversified business that generates billions of dollars in cash flow every year, even during recessions. That's why it's often considered a defensive stock, perfect for adding stability to your portfolio. On TradingView, looking at the daily chart of Pepsi, we can observe that over the past years, Pepsi has consistently stayed above the 600 smoothed moving average line, showing a strong long-term uptrend with new all-time highs almost every single year. However, recently, due to the major market drop and some slightly weaker than expected earnings, the stock has broken below the 600 SMA line, something very rare for Pepsi. Right now, it is trading around $134, approximately 15% below its long-term moving average, and sitting close to a key multi-year support zone at around $130. Even more interesting is that this $130 area corresponds to the golden ratio, or the 1.618 Fibonacci extension, a level that is often highly respected by institutional investors and long-term traders. Historically, every time Pepsi approached these levels, it offered a great buying entry point with strong rebounds. And so, this technical setup suggests we are likely looking at a fantastic buying opportunity. Now, let's move on to a full fundamental analysis. We'll be using 10 different valuation models to calculate Pepsi's fair value and confirm if this is truly an opportunity worth taking. First, let's start with one of the most famous valuation models, the discounted cash flow or DCF analysis. To simplify the calculation, I'm using Finbox, which automatically computes the DCF using 3 different methods. Using the growth exit formula, which assumes the company continues to grow fairly for 5 years, we get a fair value of $167 per share, representing a 25.6% upside. Next, looking at the EBITDA exit multiple, which values the company based on its operating profitability, Pepsi shows a fair value of $152 per share, offering a 14.2% upside. Finally, using the revenue exit formula, which values the company based on its total revenues, we get a fair value of $146 per share, meaning an upside close to 10%. Moving to simply Wall Street, the premium version, we see that according to 22 analysts, the fair value of Pepsi is around $215 per share, meaning the stock is currently about 37.9% undervalued. Moreover, analyzing the company's price to earnings or PE ratio, Pepsi trades at 19.6, which is significantly below the sector average of 28.5. Remember, a lower PE ratio often indicates a stock is undervalued compared to its peers, offering higher potential upside for investors. According to MarketBeat, which combines 18 professional analysts' predictions, the average price target for Pepsi over the next 12 months is $160, implying a 20.30% potential upside. Next, using alpha spread, the base case fair value for Pepsi is calculated at $164, showing the stock is currently undervalued by about 19%. Additionally, if we scroll down to alpha spread's free cash flow analysis, we can see that over the last 3 years, Pepsi has delivered consistently positive free cash flows with a solid margin of around 10%. Demonstrating strong financial health and stable growth. Moving forward, based on value investing calculations, which also uses a blend of different valuation models, Pepsi is predicted to have an average upside of 22.27% according to 28 analysts. To further confirm the opportunity, I also checked 3 other platforms. Guru Focus shows a fair value of $177 per share, Stock Rover has an average target price of $157, implying a 17% upside, and Stock Analysis, based on 13 analyst forecasts, points to a fair value of $160, recommending the stock as a strong buy. So, when calculating the average of all these fair values, Pepsi's final fair price comes out to around $166.59 per share. Considering the stock is currently trading at around $134, this means a potential upside of 24.3%, which is an excellent opportunity, especially for such a stable company. On top of that, if we check a basic financial platform like Yahoo Finance, we can see that Pepsi offers an attractive dividend yield of 4%, which will get us more profits over time. So, based on both technical and fundamental analysis, this is a strong opportunity. Let's now head over to XStation 5 to buy another share of Pepsi for our portfolio. After opening your XStation 5 account, head over to the Market Watch section. In the search bar, type in PEP, which is the ticker for Pepsi, and make sure to select the stock version, not the CFD. Once selected, click on the chart icon to open the live chart and check the current price action. Now, to place the order, simply right-click on the chart and select New Order. In the order window, type in the number of shares you want to buy. In my case, I will buy one additional share of Pepsi. You can double-check the market price, and when you're ready, click the green Buy button to place your position. Confirm the order, and that's it. You now own a part of one of the most stable and iconic companies in the world. With XTB, remember you can buy fractional shares as well, which is perfect if you are just getting started or working with a smaller budget. Now that we have added Pepsi to our portfolio, here are 3 more undervalued stocks you should definitely keep an eye on this month. First, we have Alphabet, also known as Google. Right now, it is trading around $160, but according to multiple valuation models, its fair value sits at approximately $190, offering a potential upside close to 19%. It's one of the strongest tech companies globally and the long-term winner in my portfolio. Second on the list is Micron Technology. This stock is trading at around $76, but its average fair value across several models is $129, giving us a potential appreciation close to 70%. Micron is a key player in the technology space, and with the increasing demand for memory and AI-related tech, its long-term potential is massive. And lastly, we have Centene Corporation, CNC, which was actually the top stock pick for April. If you missed that video, I highly recommend watching it. CNC still has a potential upside of over 90%, and even though it has already gone up slightly, it remains deeply undervalued based on our analysis. So there you have it, Pepsi as the top stock for May, plus 3 bonus picks that could help you boost your portfolio this year. If you found this video helpful, don't forget to like it, subscribe to the channel and share it with someone who could benefit. And I see you in the next episode, and as always, happy investing. Bye bye.